Now, in this lesson, we would like to look at this new concept of unemployment insurance fund. This is still a concept, it's still a topic, it's still a chapter under finance. In our previous lesson, our discussion was on value added tax, commonly known as VAT, which is 14% levied on every item at every stage. Each time a value has been added onto the what? A value has been added onto the item. So you have bought an item, you have bought a good, you have bought a service, you have added value to it. The value you have added will mean the price of the item will obviously increase sometimes or for the most part. And because of that, some tax is levied onto it. The tax is 14% of the price of the item. That is what we have been discussing in the what? In the previous lesson. In this lesson, we would like to look at what is called the IUIF, which is the Unemployment Insurance Fund. Now, the way it states, it is some type of an insurance fund, which is supposed to take care of you in case you are unemployed. Now, that then means, should it happen that you are employed at one time, you have got a job, you have something to do, you're working, then that means the government, for the most part, have to ensure that should you lose your job for some reason, then at least they can insure you, they can provide for you for some period of time until you find some other job. So yes, UIF is an insurance that is deducted from an employee's, rather employer's, an employee's salary. So what happens is you got a job, you're working maybe per week or per day or per hour or per month. Then each time you get paid, the government deducts some money, which is called the Unemployment Insurance Fund. This money which is deducted, okay, it is deducted and it is kept with the government. Now, should you lose your job, then the government will come in and will provide for you some wages for some period of time or some amount of money for some period of time. Now, if this happens, then the employee, that is, in case you lose your job, then you can claim some allowance from the what? From this fund, from the insurance fund that you have been submitting or you have been paying for some period of time until you again get some other job. Okay. Now, the employer also has got to do their part in ensuring they contribute something for you. And so you as an employee, you contribute 10%. The employer, not 10%, sorry for that. You as an employee, you contribute 1%, 1%. Now, 1% of your salary is what is deducted for what? For the insurance fund. Now, your employer, the person who is paying you the salary, will give 1% of the same salary you're earning. So in total, the amount of money submitted to the government is going to be 2%, with you, the employee, contributing, rather you, the employee, yes, contributing 1%, and the employer contributing 1%, altogether giving what? 2%. That is monthly. Now, that is going to be collected for as long as you are still having a job. The day you lose a job, you can claim to the government that, yes, you have lost your fund, you have lost your source of income, you have lost your job. Now, you don't have, you don't have a source of income. So the government will have to come in, and from the insurance fund, the government will have to do what? Will have to pay you. Okay, so take care and note that the insurance, the amount of money you pay every month or every week or per hour, based on your rate is 1%. It's mainly deducted per month or sometimes per week. It's 1%. Your employer also has the obligation to pay 1%, altogether making 2%, which is what is submitted every month. Yes, It's very helpful. It's very, very helpful. I will be sharing with you a screen right away where you can now see for yourself a few of the things that we are going to be looking at. Some practice questions that are going to be what we are going to be discussing. So yes, here we are. You had a job before, now you lost the job. So because you no longer have a job, you have to claim what? Some fund. That fund that you claim from the government is from the insurance fund that you have been paying every month or what? Or every week. So this normally happens when people have lost their job, and as you're very much aware, it has been a very difficult time during the what? This corona crisis. And yes, a lot of people lost their job, and also they got some funding from this insurance fund. Yes, that is what we have for the unemployment insurance fund. So now here is what? Here are some few questions that we would like to discuss. The first question under activity is what? Is question 1.1. Question 1.1 is saying someone works at a telephone company, and he earns 780 per week. So we are supposed to calculate his weekly his weekly unemployment insurance fund. Now notice that this person is going to pay 1%. His employer will also pay 1%. In total, this person will have 2% submitted in their name to the insurance fund. And so in our calculation, it's going to be 2%, okay? It's going to be 2% of what? 2% of this amount of money, which is how much? 780. Now, this 2% mathematically can be written as 2 divided by 100. And so we will go with that. That is 2 divided by 100 of, which means times 700 and what? 780. So when we get 2% of this, what is going to happen is we will get the actual amount of contribution which this person is making every month, rather every week. So let's see this right away. So we'll be having 2 divided by 100, which is the same as 0.02. We multiply this with what? With 780. This gives us 15.6. So this 15.6 is the weekly submission to what? Is the weekly contribution that this person is paying monthly, rather weekly. This person is paying weekly, every week. The second question is asking that if a man pays UIF, which is the unemployment insurance fund, if he pays 87 per month, what is his monthly income? You see, so this is how the question is coming. The question is very much like, well, the unemployment insurance fund for this person, which is 2% per month, is 87.90 per month. So how much is his income? Okay, how much is his income? Now notice that the 1% coming from this man and the other 1% coming from the employer, added all together, gives the contribution for this person. Okay, so now let's read this again. If a man pays UIF contribution of this amount per month, what is his monthly income? What is his monthly income? Okay, so what is this going to be? Well, this is going to be 1%. Okay, so it'll be like 1%. 1% which has come from this man, okay, and 1% which has come from who? From the employer, all together added and submitted in the name of this person will give us how much? Will give us 87, what? 90. See that? 1% from this person and 1% of the other person, rather of the employer, added all together gives this amount. So the question here is, how much is this person earning? Now, normally, we would like to ignore the contribution which comes from the what? Which comes from the employee, especially from the employer in this case. So we would like just to say the 1% is what is being indicated here. So if this is what we are talking about, then we can go ahead to do what? To carry on with the calculation. And what's the 1%? The 1% is 1 divided by 100, okay? And what is 1 divided by 100? Well, 1 divided by 100 of what? 1 divided by 100 of 87. No, not of 87. 1 divided by 100 of the salary. Let's call it P. Is what is 8 what? Is what is given here as 87,90. Yes, this is what we have. So the 1% is this. So then, how do you find the value of P, which is the salary? Well, to find the value of P, we will cross multiply. And so what will the value of P be in this case? The value of P is going to be 87,90 times what? Times 100. That is times 100. And what will this be? This is going to be 8,000, okay, 8,790. Yes. So this is what we get because the 1% of this is exactly that. All right. Now, this is what we have. The next question is question 1,3. And in question 1,3, they're saying an employer contributes 540 to the Department of Labor every month for 3 employees. Okay, for 3 employees. Each employee earns the same salary. What is their salary? Okay, so 3 people all together gets 540 contributed on their behalf to the Department of Labor as their what? Unemployment Insurance Fund. The question now is, if that is their contribution as UIF, how much do they earn? Well, the thing we want to deal with here is this. These are 3 people. That means we need first to find out one person, how much is, what is it going to be for one person? Okay, what is it going to be for one person? Well, for one person, we are going to have this 540. We would like to divide it by 3. We would like to divide this by what? By 3. Now notice that when we divide this by 3, what do we get? Well, let's first check what we are going to get here. This is going to be 540 divided by 3. What do we get? This is going to be 180 for each person. Now, because of this, what we are going to do is, now that we have got 180 here, 180, well, this 180 is the contribution for each person, where the employee contributes some amount of money and the employer also contributes some amount of money. This will then give us what? This will then give us That means the employee contributes like 90 and the employer also contributes 90. You see that? Because this is what this is now for two people, like the employee and the employer. So the employee contributes and the employer contributes. So what this means is we again have to divide this by 2. Why are we dividing by 2? We are dividing by 2 so that we get the actual contribution, which, oh, it's what we are also supposed to have done here. It's what we are supposed to have done here. What we are supposed to do here is also divide this total amount by 2. Let's fix this. Then when we divide it by 2, we get the actual salary. Why have we divided it by 2? Because we did not include the other 1% here in the name that we would do it towards the end. Kind of forgot to do that. So this is 8790. When divided by 2, what do we get? Well, we get 4395. So this is the salary, 4395, like that, yes. So now in this case, to find what one person contributes as an individual, not him and the employer, we are going to get what? We are going to get 90. So this 90 is now the UIF contribution for one person, which is the 1%, okay? So we can therefore say that 1%, okay? This is 1%, 1% of 1% of the contribution of the salary, 1% of the salary is 90. So the question is, how much is the salary? Well, to find how much the salary is, what we are going to do is going to be to transform the 1% into a mathematical expression, which is what? 1 divided by 100 of P, that is times P, okay, times P to give us 90. And so can we find the value of P? Yes, we can find the value of P by cross multiplying. And so when we cross multiply, what we are going to get is the value of P. And what will it be this time? Well, P is going to be equal to what? P is going to be equals to 90 times what? Times 100. And so you see that each person is earning what? Each person is earning 9,000. Now, we could have also continued with this 180, but this 180 would be 2% of the what? Of the salary. So we would deal with it as 2% of the salary, which would eventually simplify to this, okay? That is, if we take that approach, if we don't divide this by 2, then we insist that this is the contribution on the head of one person, okay? This is the contribution that the person and the employer is making, then this is 2%. So we will be like 2% of the salary is what is 180. And if that is the case, can we find the salary? Yes, it would be a similar process. Let me just show you a little bit here. So 2%, okay, we can say 2%. That is 2% of the salary, which is what? Let's call it P, is 180. Like that. So can we find the value of P from here? Yes, we can find the value of P because 2% can be written as 2 divided by 100. So this will give us 2 divided by 100 of what? Of P, which is the same as times P. This one should give us what? This one should give us 180. So can we find the value of P? Yes, we can find the value of P. And what will it be in this case? The value of P in this case is going to be, well, before we finally get P, we first have to write 2P equal to what? Equal to 180 times 100. That is cross multiplication times 100. So this would mean in the next step, we will be having what? We will be having 2p this time equal to what? 2p this time equal to 18000, which is 18,000. So to find the value of p, we would divide 18,000 by what? By 2. So when we divide 18,000 by 2, we will be getting actually the value of p. Notice that we do the same on the left-hand side, okay? We also divide it by 2 so that we can find the value of p. Now notice that this way we can find the value of p. And what will it be? Well, p will still be equal to what? To 9,000. Yes, which is actually what we would have done also here, you know, right here. So we could say 2% equals to that. So 2% equals to this. And because 2% equals to that, that means p will be now this one divided by 2. It's much better to put it like that. 2% equals to that. And if that is the case, that means here is going to be 2. And so this value here is now going to be equals to 2p. And so to find the value of p, this final value must be divided by 2. So in other words, from here, what would we have? We would say p is now equals to that value divided by 2, which gives us this amount of money. So yes, I know it may be a little bit confusing, but this is something you can easily, you know, fix it. Just ensure that you get it right, in the sense that you read the question nicely. If the question is saying the UIF contribution is this for this person, is this for this person, then the thing you want to know is that that contribution has come from the employer and the employee, in total giving 2%. So the 2% is what has been given. You see? So the 2% is what has been given. Meaning, if you are to find the contribution of only that one person, then you have to do what? You have to divide by 2. So like you see in the first question here, in the first question, what we have got is 15. 15 is the contribution for 2 people, the employer and the employee. If you are interested in finding the value that the employee has given on his own, then you again have to divide it by 2. And when you divide it by 2, what you get is going to be, well, 15,6 divided by 2, giving us 7,8. You see, that is how it is. So it would be 7,8. That is it. So this is how we carry out calculation on unemployment insurance fund. The fund takes 1% from the employee, 1% from the employer, making a total of 2%. The 2% now is submitted as the contribution of the employee. And that way you can carry out the remaining calculation with ease. So this is how we do calculations on UIF. And this is also where our lesson of this time ends.